Hey everyone, welcome to the video. If you're new, make sure you are subscribed, hit the bell button and leave a like. Again, sorry my face isn't here, it's rather warm. Windows open, so if you hear bees, seagulls and the lot, yeah, ignore it. Anyways, what if we're wrong? What if everything in terms of past data is absolute bollocks? That's all I want to propose in this video. So make sure you do watch it throughout. I want to talk about maybe I was wrong in terms of the bull market running until maybe next year. On cue, sirens. Don't live in a city, it's a nightmare. Anyways, moving on. We need to look at realistic expectations. Now, if you've been watching my videos, you'll know that I like to go off basically the 5-day chart, looking when we kind of reject certain levels at points. The 3-day chart you can argue as well. This EMA is the EMA 21. It works very well. If you go to the log scale, you can start seeing it in a bit more clear depth. And fundamentals of this all is simple. Just trend analysis. You need to go off what the market is telling you. Simple as that. And that's what I want to talk about. So if we go back in time and look at previous levels and structures, and if we're using one bias, which is essentially the EMA basically trending up over the course of time. So if I get my little timepiece out, if I can find the freaking thing, where is it? Talk amongst yourselves for a minute. There we go. So if we're looking at this potential, let's just say structure change here, this point from this point level, and going all the way to, let's just say, a structure change here. That first one was quite large. It was roughly 900 days, as you can see by this. 900 days is a long, long time, by the way. If I want to change this, I think I should really. You may make life a little bit easier. Change that to black. Bear with me. There we go. That looks a bit better. You can actually read it. Anyways, it's really important to understand this. In my opinion, overall, that's massive. That'll do. So that is one cycle essentially, and you've got to look at it and take it with a huge grain of salt, because there's so many different confluences that you can use, in my opinion anyways. You got to look at everything else. You got to look at so many different metrics that look pretty awful at the moment, and this is where we're thinking, well, maybe we were wrong and we aren't in this mega kind of super cycle. We may actually just be following whatever the sentiment is giving me, and that's the proposal I want to give you. Is this market too immature, too early to basically state that we're going to go off past cycle data? Is it just a sentiment based element where people come in, people come and go, get wrecked and then disappear, and then the prices fall and it bottoms out and then it goes again? Are we seeing that? Have we had in this cycle, due to the pandemic, due to the increased quantities and due to all the inflation rate changes, a quick boost, which has allowed things to kind of unsettle its narrative, therefore create more and more people to come in with an opportunity, therefore allowing them to get wrecked potentially? That could be an interesting proposition that we could realistically talk about. If we're looking at this level here, for me, going from the start of this point, all the way. Now, this is where it gets interesting, because we have broken structure here, but we actually didn't form a new high, and we actually formed, essentially a new low at this point in March, essentially, if you're looking overall at the data side of it. So this one's getting very much flaky. We could probably argue to this point. Why to this point? Because we've broken structure at this low, a bit higher. There we go. We've broken structure overall across this level and formed a new high. So we could be looking at wherever you kind of want to put it realistically. That's the thing. It's so subjective to kind of see how these market cycles run and how they kind of work. And if you're looking at it a bit more zoomed in, we've had this monster dump, which was the previous cycle, the horrendous kind of years, which everyone hated. And we formed a nice little run up, which was mainly Bitcoin, but we actually didn't form a new high. We didn't form a new high. We rejected, and then we came back down, another lower high, but we didn't form a new lower low here. So this is why I'm thinking, well, maybe from this point here where we're above this level, which is essentially August, which is where I'm thinking. So it's always of interest to kind of plot these sort of things. So if we're looking from this point, in my opinion, to this area, that's kind of what I'm looking at. So this is where I base my previous analysis on. Are we going to see roughly 800 days, 900 days? And what we've kind of got so far, in my opinion, overall, and this is where I think I could be wrong, is we've only essentially, we're less than a year in, which is kind of an important level. So this is the thing. Yes, we've crossed below certain points and certain structure levels, but it's important that we don't lose certain places on this. And this is where it gets interesting. Are we in a bear market now? Well, potentially, yeah. Potentially, yeah, because if you look back in time here, and you look at like the 3-day chart, for example, or the weekly time frame, or whatever, how many times on the weekly time frame do we actually close below it? We don't. How many times are we closing above it on here, apart from this little fake out here, but we're in structure, it's fine. You know, we don't. You know, this is where it gets interesting. On this side, yeah, we do on the fake out, but is it a bull market? No, it's probably just probably a bull trend overall, which is quite strong, not a bull market. Whereas when we get to a certain point, we are actually forming new highs, which is good. We're actually, for how many weeks? 1, 2, 3, 4, 5, 6, 7, 8 weeks, give or take. We're actually below that line. That's massive. That's huge. And that's where the problem is. That's what sits uneasy with me overall, as that kind of element shifts. So this is why I'm thinking, well, maybe we might be out of that cycle. Look how strong we were from all the way across, all the way up. Once we broke up and broke a new high, the trend was there. The trend was there, but now we're correcting quite severely. So if we're looking overall and looking at this log scale here, and we're doing a fib from this point to this level up here, yeah, we could still go a lot lower. And I've said this before. I said we can go a lot lower. But for me, the absolute key thing for this, in my opinion, is always going to be this top. This top is always going to be freaking huge if we're looking at the log scale. If you take off the log scale, by the way, and looking at that, that's kind of where it goes. And it's kind of like, whoa, hello. So you got the different entity there. This is huge. And people saying that this is not a, you know, this is not the start of a bull market. It fucking winds me up, this, right? And you can probably tell. There was people that were going, oh, it hasn't even started yet. Just look at that chart and tell me what has not started. It was absolutely parabolic. And this is the weekly time frame on the normal scale. Look at it. If you weren't taking profits, you deserve to get wrecked at the end of the day. That is a fundamental line. If you got in late and you couldn't see that this market was absolutely parabolic, absolutely exploding, you shouldn't be in this market. You should be waiting. And this is where that level, in my opinion, is absolutely crucial. If we are going to go and hit that, we have to bounce off it. If we are going to go and go below that, it's going to be ugly. And this is the thing, we're talking the total 2 chart, the amount of crap coins that are sitting with loads of equity in them still and bag holders, they will eventually, you know, bleed out. They will eventually vanish and hit that sell button. But at the end of the day, that is where it is key. But I'm thinking everyone is wrong. I'm thinking I'm wrong. I'm thinking everything is all sentiment based. I think we're on a crash collision course for that red line, in my opinion. 800 billion market cap. So we could lose another 30%, give or take, in my opinion. And that's just putting it lightly. I don't want to be too kind of doom and gloom here. Actually, it's more than that. It's roughly about 40%. But give or take, it's going to get quite interesting around that level anyways. So just be absolutely crucially careful in terms of this. In my opinion, we're in a bearish trend, a very, very heavy bearish, and I've said it for freaking months and people ignored me. Are we in a bear market? Well, this is where it gets make or break. If we go below, and in my opinion, and we stay below a certain point, it's always going to be pretty ugly. But we've got to look at the facts here. How much are we kind of measuring of a bear market here? If we're going to go from the top to where we are right now, we've corrected 51%. In most markets, that would indicate a bear market, in my opinion. But right now, it's too hard to say. It really is. But I think if things don't turn around anytime soon, that 500-day prediction, 600-day prediction, 700-day prediction, whatever people are saying, maybe even 800 days from the previous cycle going to that bull market, I think it's not going to happen. And I think we may well be over. We may well be over right now. So it's important to note it. Now, the one thing as well I want to kind of talk to you about is if you go on to look into Bitcoin and go on to even the pie chart indicator, this was something that kind of told us where roughly the top was. It's a very, very hard indicator to gauge because ultimately, you know, it's just one indicator. But realistically, this has got some good truth to it in terms of the overall kind of bias. If we're looking at the stock to flow model, it looks like absolute turd at the moment. It looks like it's breaking. And that isn't good. And I've always said this. If you've seen my content, people give me a lot of backlash over it. I've always said that this is bollocks. I've said that it works in a way in terms of the fabrication of the data. It will work. But you need to remove this. You cannot draw, in my opinion, on a market or speculation potential price points. Any market will work and the price doesn't matter realistically. You could have the strongest growing network of the amount of people and the amount of holders, for example, in any asset, and the price doesn't mean anything. Is it still strong? Is it still working? Is it still functioning? Yes, it's fine. Look at companies in the stock market. Just because they're a certain price point doesn't mean that they're a bad asset. At the end of the day, you shouldn't draw upon it because it's going to bring in the greed factor. I personally don't think that we're going to hit $1 million as per, you know, in what, a few years' time? I don't think we will. I don't think it's physically possible. But overall, I could be wrong. That's the whole point of it. And yeah, it looks great that it kind of is following it, but I think it just gets a bit too aggressive towards that point. That's my overall opinion. I don't think the scarcity of it is quick enough. That's the problem. That's it. And I think maybe in 10, 20, 30 years' time, we may well see certain price points of this. Potentially, who knows? But for me, in like less than 4 years? No, I think that is too much to ask for, in my opinion. But hey, I could be wrong. But I think we're being very, very naive. I think we're being very, very naive if that is the case, looking at this. But yeah, if it is a store of value and if it is going to continually grow, that's fine. It just depends how much, how aggressive, which is why I think we crash. I think people fall into the narrative of greed and it goes crazy. We all fall into it. I myself did. But it's why the mantra of taking profits is key. So overall in this video, I kind of hope that you get the gist of it and why this level is kind of, in my opinion, very, very important. That range, that potential, you know, demand area for the overall market. This is a market index. This is the entire market. If we go below $1 trillion, people might get a little bit anti and go, oh my God. But at the end of the day, like, we've grew so much as an asset, as stuff like that. It was always going to come back down. But I think too many people are caught up in the idea of a bull or a bear market. Play what you see. And if you see what you see is good, or if it's bad, just drop on it. The best thing you can do as an investor or as a trader is look at your own analysis. Don't copy other people. Just make judgments of your own call. If you enjoyed this video, let me know. Leave a like, leave a comment, all kinds of good stuff. And yeah, be back tomorrow. Hopefully, start getting the camera back on soon.